I'm going to go through problem 11A with you. It'll be at a fairly rapid pace with the idea that you can put this on pause anytime you want to try to catch up. As you look at these transactions, you can use the one that came with your CD, or you can also open the document that I'm putting in a folder on Angel for Chapter 1 for Problem 11A. So here we go. I'm on page 20, the bottom of page 27 talks about a new business called Walters Realty, and the owner is D.R. Walters. And as we go through these transactions, notice that there's a place to record cash, office equipment, accounts payable, the capital account, revenue is which when you are selling something from your business, whether goods or services, and expenses. Now I put a yellow here where the equals is at because accounting has a fundamental accounting equation. Assets equal the sum of your liabilities plus your owner's equity. So what you own is the total of how much you still owe on it plus how much your equity is in it. Anything in the expense column is going to be a subtraction from the right side of the equation. So that's why I put this pink column in here to know that anything to the right will be a minus to the right side of the equation. So here we go. And letter A, Walters deposited $14,000 in a bank account in the name of the business. So the business's cash is going to go up by $14,000. So you want to write a plus there to show that that is happening. And also you would go over to the capital account, and capital is when the owner makes an investment. So this account now is getting bigger, so that's also a plus 14,000. So notice that this is an equal sign. We have done the same on the left as on the right, so our equation's in balance. Looking at letter B, we paid the office rent for the month. We wrote a check to do that. Our cash is going down, so cash is a minus 400. And this represents an expense to us. And so the expenses, anytime you record an expense, it's going to be going up because before the expense was 0, now it's getting bigger. Even though we have a minus on this side of the equation and a plus over here, remember that everything in this column will represent a minus to the right side of the equation, so we're still in balance, okay. Looking at letter C, we bought office supplies paying cash for $445. So cash is going to be getting smaller, so it's going to be a minus 445 to cash. And we are spending this on supplies, which is an expense. So we go to the expense column, and it's going to be an increase, and we label it supplies. Okay, looking at the next one, we bought office equipment on account from Bellows Brothers for $7,200. Our office equipment is getting bigger, so we go to the office equipment column. We're going to put a plus 7,200 there to show that that account is getting bigger. The amount that we owe people is also getting bigger. Accounts payable are accounts that we have to pay later. Okay, and so accounts payable is going from 0 to 7,200. Therefore, it's a plus. Okay, looking at the next one, which is letter E, we received a bill for advertising, $556. It doesn't say we paid it, just that we received the bill. So the amount that we owe is going up. So we're going to record it as a liability. And this is an expense, and so the expense is going to get bigger. Remember, though, that anything in this last column is subtracted from the right-hand side of the equation. So even though both of these are pluses to individual accounts, we're plussing and we're minusing on the same side of the equation, and therefore we're in balance. Okay, going to the next one, which is letter F. In letter F, we paid on account to Bellas, a creditor, $1,000. We wrote a check. So in letter F, our cash is getting smaller, so cash is a minus. And the amount that we owe is decreasing, so we have decreased our accounts payable by $1,000. And so we have subtracted $1,000 on either side of the equation. Looking at letter G, we sold services for cash. And letter G, our cash then is getting bigger. And our revenue account, because we've made a sale, is getting bigger. So we're in balance. Looking at letter H, we received and paid the bill for utilities, $238. So we've written a check. So in letter H, our cash is going down. And this is for an expense, so we go to the expense column. Anytime you record an expense, it's going to get bigger, and we're going to label it utilities. Looking at letter I, we paid on account to the weekly crier a creditor $556, and we wrote a check to do that. When you write a check, your cash is going to decrease by $556, and we're paying on an account. The amount that we owed was in accounts receivable. When we pay down the balance of accounts payable, when we pay down the balance is going to decrease by the amount that we paid on it. So here's a minus over here on the left and a minus on the right of the equation. Looking at letter J, we paid the truck expenses, about $356, so our cash is going to go down. And this is for an expense, so our expenses are going to go up. Okay, and in letter K, the owner withdrew cash for personal use. We wrote a check, so cash is going to go down. And we're going to record the draw in the capital account. And so we're going to make that a minus. Instead of investing, they're taking something else, so it's a minus $1,200, and we're labeling it drawing. At this point, you would run the total on all of these columns. If you do that, you should come up with these numbers. Once you get these numbers, then you're going to add what you have here in these two columns. We're going to add those together, and you get $19,965. Then we're going to go to the right side of the equation. We're going to take the liabilities plus the capital plus the revenue, add those all three together, and then subtract $19.95. And your answer should be the same number that you have over here. And this concludes 1-1A.